Warren, as always, many thanks for your time. So in that sort of debate about the Reserve Banks of New Zealand and Australia, who's right, who's wrong?
Well, very different environments at the moment. The Reserve Bank of New Zealand is getting ahead of the inflation game, which is increasingly looking like the right strategy. The Reserve Bank is patient. They don't think inflation is going to rise as quickly as we're seeing in other countries. And of course, they think, as many other central banks have been saying, it's transitory. It's going to go away. The big central banks overseas are starting to change their tune. They're starting to lose patience with this transitory view. Reserve Bank of New Zealand is getting ahead of the game. A stitch in time saves nine. They're moving early to save, maybe having to move more later. I think the Reserve Bank's now starting to run a bit of risk here in Australia that they get behind the curve.
OK, so one of the reasons why I'm interested in this is because the Australian Reserve Bank has used quantitative easing. It's in the past said no to negative interest rates. But let's say, for example, there was a black swan event. You know, something means that the markets fall, the economies fall into the future. If you're raising interest rates now into a booming economy, then you've got some ammunition to throw back at the economy if something went wrong. If you've kept your interest rates close to zero, you haven't got too many bullets to fire.
That's right. And I think that's really important in reference to our starting point for monetary policy all around the world. And that is it's very stimulatory. Interest rates are near zero. They're doing QE and other unconventional policies. As the economy normalises, you could argue even before inflation becomes a problem, they should be returning monetary policy to normal, which might be a cash rate of 2 or 3% here, getting rid of quantitative easing. Look, that's their objective, but their time frame is years. They need to do that now with the way these inflation trends are picking up. And the reality is the world economy, the Australian economy, is bouncing out of this pandemic much stronger than anyone thought. So you could argue that we probably did a little bit too much in terms of fiscal and monetary stimulus, and we now need to think about unwinding that.
OK, so how do we compare right now with the rest of the world?
Well, our inflation rate, although 3 at headline, 2.1 at core, is still lower than most countries around the world. You can see here on this graphic, Brazil, 12%, Russia, 8%. But have a look at the economies that are similar to us. The United States, Canada, the UK, New Zealand, they're all above us and they're all high. And I think that's where we're going. I think that global inflation trend is going to roll up onto our shores over the course of our summer.
But isn't the theme exactly the same? That every one of these economies is seeing inflation because of shortages of labour, shortages of supplies and rising oil prices. They're the keys, surely.
Oil prices are playing a role. Energy prices are in many countries. The global supply chain bottlenecks are clearly impacting everywhere. And it's starting to impact here as well, but very clear in the United States and Europe. And that's the transitory or temporary component, which isn't looking transitory. That demand for goods, that pressure on the global manufacturing system is being maintained right up to this very day. So look, there are common features and they will end up on our shores. So far, we've had our inflation rate lower. Maybe the Delta lockdowns has given some businesses a pause before raising prices. I think all will be revealed over the next 6 months, both in terms of the persistence of inflation overseas and the amount of it that comes here to Australia.
And the willingness of businesses to raise prices. That's the absolute key here, because in the past, businesses have been reluctant to raise prices because of competition grounds. But if their own costs are starting to rise and they all do it together, ultimately, that's where the inflation comes from.
Exactly. And the environment to put prices up is going to be very friendly. That is, consumers have jobs. I think wages are going to start going up. We know there's a lot of savings. Consumer sentiment's doing well. This is the time to do it. And that resistance to inflation, or that resistance to price increases that we've seen for the last decade, has been a global phenomenon. It's breaking down overseas. And you're seeing in the United States huge increases in inflation, 6%. That's 3 times their target. Wages are actually only growing about at 3 or 4%. Maybe some of the explanation for Wall Street doing so well. This is actually a margin expansion at a macro aggregate level. So you're seeing that resistance to price increases falling overseas, and I imagine that's going to be the case here in Australia next year.
OK, given they've been so steadfast in this policy of keeping interest rates on hold until 2024, so giving people, if you like, a real insight that you can borrow, you can actually go out and invest, to actually then backtrack from that Is that embarrassing for the Reserve Bank board, the governor, its staff?
I've been long arguing that they shouldn't be doing too much on forward guidance. The old days, central banks, careful what you say, don't say too much. We don't know the future. And the central bank shouldn't be putting their credibility on the line by trying to influence expectations and then, as we've just seen in the last month, have those expectations disappointed and then publicly looking like they don't know what they're doing, essentially. And so I think this forward guidance has been dangerous. And I think they've got another shock coming with the next 6 months. The Bank of England has just had a misstep on forward guidance, and the Bank of England Governor, Bailey, this week has actually said they're not doing it anymore. So, look, I think the forward guidance is something that is getting the RBA into trouble with their credibility. And I think that they should give it away.
One final quick one. When is the first interest rate rise officially from the Reserve Bank here in Australia, do you think?
I'm still going to put my money on November, Melbourne Cup Day. It's the most common day of all the meetings they have every year. Melbourne Cup Day is the most common. And there are 10 basis points. So if they've got to get on with it, they might as well do 40 basis points and get it up to 0.5%. So I think you'll get 40 in November and maybe even a follow-up 25 in December next year.
There you go. Warren Hogan, always great to have you in the program and really appreciate it today.
Thanks, Ross.